Hello, hello. Did I bump it? Can you guys hear me? Good morning, William. Good morning, Tom. Loud and clear. All right. Uh, as I said, my name is Scott. I'll be your host. Good morning, BitBoss. Welcome back. Glad you had a good vacation. The quick reminder: what we do is for education, illustrative purposes only. Nothing's intended as a recommendation to buy or sell. We're not brokers or advisors, and therefore we don't give anything that should be considered personalized investment advice. Anything that you decide to trade based on what you see here is at your own risk. Yada yada yada. Futures are open now. I still need to get these slides. I always say it. I always forget to do it. One day it's gonna happen. Stephen D's shaking his head like I know about Scott forgetting to do things. It's ADD. I was diagnosed with it. It's clinical. It's not really my fault. Good morning, John. Good morning, Victor. All right, let's get to it. What do we have going on? Futures. Well, we can see what they were. 0.19, 0.49, 0.24. Pretty good across the board. Let's give it a quick reload and see what we have as we actually start. 0.12, 0.46. Ooh, the NASDAQ is hanging on, but barely. The S&P and the NASDAQ are pretty marginal. 0.11, 0.05. The Dow's at a 0.5%. Russell's at 0.5%. What do we know? Iran talks. Waiting for Iran to signal. What else? He would be disappointed if Warsh didn't cut rates quickly. I I feel like there's a profound misunderstanding that people don't clear up. Like uh Jer Bear, my good buddy Jerome Powell, is not like the president of interest rates. he does not he does not unilaterally just sort of like pull the levers. There's an entire committee that votes. So if you replace the Fed from one guy to another and everyone else is the same, you're likely to get pretty similar outcomes for a while until that new person can maybe win other people over. But anyway, we're going to look at that today. We haven't taken a peek. I don't think it. The last time we checked, we didn't have probability for a single movement up or down for the entire year. Not a cut, not a hike. Just like a little bit of probability that it might go up or a little probability it might go down, and it's just kind of. So we'll take a peek at that maybe later on this morning. As we scan here, there's really not much. We're in a little bit of a wait and see. Does the conflict re-escalate? What do we have on the calendar? Nothing yesterday. Today we had retail sales to start up a little bit, minus autos up a little more. So consumers are spending. Hey, Vladimir, good to see you. Good morning, El Jago. Wednesday, nothing. Thursday, minimal, just standard jobless claims. That's about it. This is a pretty minor consumer sentiment report, not that well regarded. So what do we have? Well, we have earnings, and you're seeing a lot more of those earnings icons getting closer and closer. A lot of things that will impact trades potentially in the short term. So, first point I would make is to make sure if you don't have a chart that looks like mine, where I have the ability to see however much I choose, I have it set at, this looks like 7 days. I might actually pop it to 10 real quick. Yeah. Okay. And you might think 3 days, Scott. It matters. It matters. Just watch. Gives you just a little bit more. Okay. And now I can, let me get my watch list prepared here. I can kind of pop around and see that GM has earnings on the 28th. So even if this pulled back and was kind of sitting right here, I'd be like, I'm a day away from earnings. I'm not going to pull the trigger on that because I'm not going to hold that now. Now, this is a personal rule. And it's a funny thing because I find that people tend to, through experience, find their own way to personal rules around earnings. Here's a quick little survey question if you want to throw yours out. Do you personally have a rule around earnings? And does that rule allow you to hold through earnings? Does it have you shut down trades before? And it may be different. It might be if it's an investment or a longer term trade, you decide I'm willing to hold that through earnings, especially an investment. Like if you own stock longer term, yeah, you're going to hold through earnings and just sort of take the beat if it comes. Um, or do you close before? Kyle says I don't trade into earnings, and I that's my camp with like one or two exceptions. Yeah, just a little gray area, not much, a little gray area. Will I sometimes close everything but one contract and then take the gamble? And I recognize it, right? Eyes wide open. It's take the gamble. You're rolling the dice, buddy. Blow them and throw them. So, but um, I love the answers. Like this is exactly what I was hoping for. So thank you everyone for sharing. Kent's like, I don't mind. I'll hold it. You win some, you lose some. Um, and I would actually, one thing I would counsel if you do hold through earnings is keep a separate log. It's a funny thing. Way back when I worked for Thinkorswim when it was its own company. So it used to be headquartered in Chicago. It was started by a bunch of old floor traders from the Chicago Board of Options. I worked for an education company that merged with Thinkorswim, and so I was there for probably 3 years before Ameritrade came in and bought the whole thing, and then obviously Schwab came in and bought that whole thing, and now we still have Thinkorswim, the platform, as a remnant. But those guys were big on options as inventory, and so they did a lot of like iron condor type setups, and then they would manipulate, like they would do a butterfly up here and then a calendar here, and then you would add another one, and it was just like all based on the Greeks and inventory. It was very, very interesting to see the blend because when we came in, we were all technical analysis and they were all option analytical analysis. They didn't care about the charts. If it went higher, you added something to it. If it dropped lower, right? And it was, um, although interestingly, if you listen to some of those guys now, uh, uh, Don Kaufman, uh, Tom Sosnoff was the original guy who founded it. They still have a channel, and you can hear them. Tasty Works, Tasty Trade. They use a lot more technical analysis now than they did. Um, but it was interesting because I'm like, yeah, okay, these guys know what they're doing. I'm going to learn this, and I started trading like them, and there was a lot of these like hedges on the outsides, and I'm trading them, and all of a sudden one day I stopped and I went back and I took all of my hedges only the hedges, not the iron condors, not the core positions themselves, only the outer edges. and I did the record keeping on those. Like I put them into my log, the log that you have access to, exactly that log. I promise you. I've had that log for so long. This 100 trade breakdown. I love it. I think it's a great way to build slices of information that you can process. So I went through and I put it in there. And what did I discover? It was negative. My hedges, the whole like don't lose money, it's your insurance policies on the outsides were net negative. But and not like marginally, right? Like I tell people if at the end of the year you were to evaluate and do record keeping on your own hedges. If you're new to the group, we'll talk about hedges. When we see the VIX do a certain thing, we'll be like, oh, that's time for a hedge. We haven't seen that recently because we weren't really all that inclined holding a bullish position. But uh, anyways, um, a little loss, which means that the hedge, like that's like think about if your artwork that you insured is worth more at the end of the year, well, the insurance you paid lost money. That trade off is acceptable. So if overall you made a bunch of money trading and you had a couple of hedges that didn't, but if your hedges have eaten significantly into your profits, they didn't do their job. They cost you. And there's only way that we can see that is if we isolate that. That's its own unique. So when I isolated it, I realized, well, that's that's not helpful. You know, it's like the old joke says, guy goes to the doctor, says, Doc, it hurts when I do this. And the doc says, stop doing that. Same thing with the earnings. It's an ability to isolate where every time you hold through earnings, you look at like what was the result of that, so that at the end of doing it 20-25 times, you have good data. That data will then be like, yes, over time, you actually are better off having held through earnings. Or it says, ooh, things got nasty a couple times, and you're like, oh, I didn't realize how much. So that's my record keeping soapbox moment for the day. Isolate different types of things that you do in order to be like, is that net beneficial to my trading? Um, so based on what a great question. Based on 20 years experience, would you say your current style reflects the most optimized approach based on your data, the most optimized approach combined with current market conditions? Right? I've never traded through the Strait of Hormuz being closed. Just a few years ago, I traded through my first pandemic, and before that, I traded through my first Brexit. And right. So that's the thing too is, we may optimize and then find that what we optimized was better for this market, and when the market shifted, you have to re-optimize. um, hell, Kent, if I knew everything, I wouldn't be here either. No. I consider myself a constant student. I'm always looking to be like, and that's the biggest problem is we have to optimize to the market. So as the market shifts, we shift. And sometimes it takes, longer. And sometimes you get there quicker. And that's a great question. Interesting. Morning, Renee. Good to see you. Okay, let's keep going. Let's go peek on some things here. S&P popping a little positive here. Let's look inside. Gapped up, sold off pretty quickly, stabilized, trying to move back up. So we're right in the middle of this range. Yeah, yesterday was interesting. You can see it tried and then it sort of just like fell out back to the middle and it did not move. The last like 3 hours, this thing did not move. Um, Yeah. Um, okay. Yesterday was interesting. Let's pop back up. Let's go look around. Start at the top. Alcoa. Now, I'm gonna tell you, this is one I was looking at. We talked that there's maybe aluminum shortages. It's right there, but this gap has me a little bit like time to get back in. Steven says I didn't love the gap. They fell short on their earnings by 20 cents. They missed, but it is holding the 50 quite well. The stochastics is pinching in there. Um, Basic materials still holding up. My thought is it's got to get. Let me zoom in. This will be the final turn. If you're waiting for this stochastics to actually the lower number to turn up, um, it's at 19, it's at 18, and what's going to turn that up, in my opinion, would be if it gets above that high. I don't need that one, which is a little higher, but not much. I need this one right here. So something like that. Okay. So that's what I'd be looking for today. I think that would actually turn this stochastics not that much, but you get the gist of it. And yeah, I agree. If I see something like that, you can see we've got a nice potential. Right? Can this make another one of those? That's what we would be looking for. Is a move that went from about 56. I mean, that was almost a 20-point move. That would put us around 85. I mean, yeah, that's up in here. Yeah, you know what? I think that one actually has pretty good potential. What else do I like about it? Uh, Volatility is pretty low, relatively speaking. If you look down here, all that vol that was kind of pumped into this thing sort of bled off, and then after earnings just finished out, and we're right back down near the bottom. Yeah, I think that one's got some potential setting up little bit of that gap. I don't love that gap, but if we can get a nice running start, I'd feel a little better. Apple changing CEOs. Apple looks like a consolidation is you know more probable than not. Mm, You've got earnings here. You're unlikely to have the pullback come in time for much trade. Though I'll tell you, I'm willing to take, if I'm even 4 days, 5 days before earnings, I'll take it, ride it, keep it for that amount of time. Depending on the stock, I might decide, hey, I'm gonna hold one piece. Now, you might say, Scott, when you hold that piece, has it ever like gap down, like ate that up and that ate some of your profits? Of course that's happened. Of course it has. But there's also been times where gaps in your favor and it explodes. So if I were to, I actually should do that. I don't know that I have the records for it. That's only maybe a few times a year. So over a 10-year period, I maybe have like one set of data if I had all of it. but like, what would the expectancy be for that one contract? Right? That one contract, does it gain or lose? And then you get your expectancy. How often are you right? How often are you wrong? How much do you make when you're right? How much do you lose when you're wrong? Then you put that into the mixer and it comes out and it says your expectancy is what? If it's positive, well, it's a good system. Keep doing it. That's it. That's where permission comes from. Not it comes from numbers. If the numbers say it is working, great. And if not, if it don't make dollars, it don't make sense. That's our that's our motto here. Uh Stephen D was doing a little forethought for us. He said he looked at the May and June's, and we've got some wide spreads. Boo. Now, Doug, I know, has reported some solid profits on stocks where I was like, ooh, I don't know, those options look questionable, and they worked out just fine. Doug, correct me if I'm wrong. Where you've seen a little bit of some width, and you're like, hey, it still worked out. So it's a tough one, right? Because when it works out, it does. It still makes money. When you get into an option that's illiquid and things don't work out, then they like extra don't work out. It's like you can't get out of that trade. And so that's where the concern is for sure. Yeah, let's go take a look now. Actually, let's go see if we think there's anything that we could do with it. Otherwise, I might just bounce it. I thought we had looked at all of them that were on the list, but things can change up. Let's see. May 15th. Oh yeah. Oh, it's horrible. Horrible. Hold on, I'll bring it over. Um, oh, it's not good at all. I have all. Let me bring this down to 14. Okay, we at least have okay, I got a little bit. I think I was a little out of the money. To the down or a little in the money, depending on which way if it's calls, I was a little in the money. 65s has 1,100 contracts. Yeah, but look at that. It's 60 cents. 60 cents on a $5 option. So you're above the threshold, which is 10%. If it's 515, I would want 465, and then it's like, okay, it's on the bubble. This one here, 45 cents on $3. That's 15%. Look at the 75. Oh, see, now I have to go back to alls. The 75s, 37-cent spread, but 37 on 163 is actually percentage wise 22%. So we went from about 11% at the 65 to about 16% at the 70 to 22%. Best. Well, by it's the best by like actual value. Like the empirical number is 37, which is less than 45, which is less than 60. True. What I'm looking at is percentage of investment. So if you buy the 75 strike, the second you buy it, the broker is going to tell you it's worth, you're buying it at the ask, or maybe they come down a little bit. You're buying it at the ask, and then it's valued at the bid. That's what your broker's going to quote. They maybe will give you the mid. Some brokers will quote the mid, but irregardless, it's going to drop. And so percentage wise, this one will be down the most. This right, the second you drive it off the curb, off the lot, boom, it loses value. Which one loses the most? That's what I mean. So, I'm gonna leave this as on the bubble. There's enough there with 1100, 2800. You know that I wouldn't trade in any of these outer zones. You're trading only the round numbers 65, 70, 75. Trying to get a split and recognizing that if things go wrong quickly, you could find yourself running into some trouble. And that's just, like, okay. If the trade goes right, you'll profit. The trade goes wrong, you may find it hard to contain your loss where you thought. So if you're like, okay, I'm going to get out here, and when that happens, I have 3 contracts and I'll lose around $400, and that's acceptable. And if it goes right, I'll make $1,000, and I've got 2.5 to 1, and I get in the trade, and then all of a sudden, when things start to go wrong, the bid ask widens, and I'm trying to put a bid in, and the stock's falling, and I just can't. I don't want to take market because I'm trying to work my way out, and then all of a sudden, I end up losing $600 instead of $400, $650, and it's like, is it catastrophic? No. Over time, if we are constantly losing 50% more than our trade risk position size allows, yeah, that's hugely detrimental. One of the it's not measured in the spreadsheet, but one of the informal metrics that I look at is the average size of a loss relative to the willing size of a loss. So if I have a $25,000 account and I say I'm willing to lose 2% in one trade, that's $500. That's my willing loss, 500. If I go look at my average loss in my log and it says that I'm losing $490, I'm willing to lose 5, I'm losing 490. At first glance, you're like, hey, that's in the parameters of the system. I disagree. Because the system that we're trying to build anchors around a core philosophy. Cut your losses short, let your winners run. That's integral to success in the markets. It's been established in a very comprehensive study that literally 70 to 80% of us are actually inherently wired to do the exact opposite. That's what we're fighting. Can we figure out how to do that? Now, if you were evaluating somebody's trading and their willing risk is 500 and their average loss is 490, how would you assess their ability to cut their losses short? It's not good. Every time you lose, you're losing maximum that you're willing to. That's not good. What am I looking for? If I'm willing to lose 500, and this is a goal that I would establish with people that I work with one-on-one, is 50 to 60%. Your average loss should be 250 to 300. If you're willing to lose 500, average 250 to 300. Why? What does that mean? That means that you're demonstrating strategies and skills that are cutting losses short. We could do a bull call spread, but here's the problem. That sometimes is the natural inclination towards a next step. The buy the option is not as appealing. Actually, look at this. Things have tightened up since the first half an hour. I'm actually now a little. Look at this. You're down to 25 cents. If it gets like this, I'm a little. It's okay. This one's down to. That's still 30. It's still 38 cents. And this one is 32. But here's the problem, Stephen, is now you're encountering a widespread twice, right? You have to buy this one. If you want to do a bull call spread, you have to buy this 60 and pay this spread and then sell the 65 and pay this spread. So you're getting hit twice on that. And then when you unwind it, if you have to, which is what you have to do if the trade goes against you, you have to do it again. Now, when you first get into the spread, you're pretty favorable to a market maker. So when you do a spread, you're good business. You can ask for a discount. You can be like, hey, you know what? I want to cut this one in half, this one in half, and this is where my offer is going to be. And they'll often take it getting in. When you try to split a bid ask differential when it's time to get out, well, if you're getting out at a gain and you can set the order and just let it sit and percolate a little bit, yeah. If it's dropping, you're trying to close a spread. Most market makers are not going to budge an inch on either side. And it's just, again, it's that exit. It's the getting out, and it's harder. It's less liquid. Anyway. Okay, let's keep going. Good chat. That was a good chat. A good oops, hold on. I need that back on the other side. What the hell? Am I missing it? All right, here we go. Okay. Where was I? My watch list. Let's get back. Archer Daniels. Actually, Archer Daniels is very positive looking. Yesterday was pretty good. Today, it's actually moving into a continuation. Heiken Ashi candle's going to be strong. I could look at this one with a stop around here, maybe 67 below this one. I wouldn't go all the way down here at this point. And then I've got now what I look now I'd look for 74. I'd basically look for 74. Got to 74 and drop, got to 74 and drop. 74 is 5 points. And a stop at 67 is about a 67.15. It's about $1.50. $1.50 to make 5. I'm at 3-1. This is a possibility. What do the options look like? 36. Let's go look at the actual options. They don't look great. They look okay. Actually, I think they're okay. Let me bring it over. Let me bring it over again. Oops. I need to get rid of this. Okay, let's take a look at these. Honestly, if I went out to May, I've got 24 days. I think it'd get there pretty quickly. I might just go with those, the 75s. Let's play with these. Let's look at 60. Let's look at 70 versus 75. Yeah, let's do that together. That sounds like a good use of our time. Tell me if this makes sense or not. I want to compare these options. I want to build this trade just to kind of walk through it with you. Let's set the trade up. We said 75 on no, we said 74, didn't we? We said 74. We said 74. We said 67.15. Today's the 24th. first, and I would need, I'll give it a week to be right or wrong, but it would probably take at least till the first. But yeah, this is a good starting point. These are wider than I would want, but let's just say I could get in. And I'm going to cut the spread to 195, 15 cents off on entry. I think that would be reasonable. Actually, the 72.50s are not bad. Maybe I'll look at those instead of going that far out of the money. Let's go here. And we're going to say $1.15, only 5 cents off. Okay. Now over here, oh, like what is this thing? Let me get that out of my way. Let's start with the 70s only. What did I do? I unchecked this box so that only this one is being looked at in all of these numbers here. If I have them both, I can't tell what's what. So I have one of them. And I'm just going to take it to one contract just to make it easy to see what's going on. One contract. You can see I adjusted the quantity down here. One contract has about $100 of risk, $277 in gain. So I said I had about a 3-1, maybe a little better. Now I only have about a 2.8 to 1. What happened? Why did I lose? And it's not a huge amount. It would be, that's an amount that everyone would probably say, you know what, I accept that. I accept a marginal amount of let's call it option or trade potential slippage because we went with the option. Why does that happen? It's the spread. Sometimes that can be explained by implied volatility. If it's a high implied volatility, it's costing so much that the time value you're losing is eroding the trade. That's not the case here. This is we know it's the spread. The spread is going to make it a little harder, but it's pretty close. And so I would think maybe I do 3 contracts. I'm risking $300 to make about 830. So it's a good roll. That's got potential. Then I come down here and I say, let's do the same thing. So I take it down to one contract. $70 of risk, 192. My math's not good right now. 192 divided by 70, 2.75. The other one was 2.8. Basically the same thing. What's the advantage of this one? It's a little cheaper. If I did this, I would end up with 4 of these. 4 of these is a little less than 300, and you'll see I'm making a little less than 800. So I could do 4 contracts here. Trade costs about $460. I'm risking about 285 of that. If I'm right, I get 760. Here, $300. If I'm right, I get 830. I think I'd probably end up at the 70s. That's probably the option. I'd get rid of this and I'd say this looks like a reasonable way forward. I've expected now if it takes a few extra days, watch this 830 number right here with me. We said it might take 3 extra days to the end of the week. 1, 2, 3. And you can see that cost me about $40 extra in time decay. That's not, again, it's not like that shatters the trade. It's just be aware of how these factors are going to impact the trade so that you're looking at it and saying, okay, I've got all the information and I'm still comfortable with this. Or you're like, you know what, the more now I have to add this and then I do this and then I'm like, yeah, this trade, yeah, that's sometimes what happens when we have, it's not the best liquidity. Let me know if you have questions about that analytical process, right? You can see, what do we do here? We've got position size. I've got risk. I've got reward to risk. I've got, some parameters for this trade. Everything's in place that If this does pass muster, then it's ready to whoops. Then it's ready to go. Let me move this back. Oh, geez. Let me move this back across. Maybe. Mm-hmm. Okay. Questions. It's gone quiet. Was that a little bit too much, or did that analysis feel right? How do I get the price slices section? Real quickly, when you're in analyze, add simulated trades or risk profile, either one of those actually relies on these slices down here. So if they're not open, you just have to click that little thing. That'll open it up for you. Okay. Where's my let's see. Okay. Um huh, fair enough. Okay. Archer Daniels. Applied materials. Ooh, I like applied materials. Um, you can see where's my drawing. This thing pulled back, and now it looks like it's trying to turn. Our stochastics is giving us flag type. I'm thinking about it. Thinking about day trading SPX currently. Any advice? Oh, well, let's go. We'll go pop in real fast here. AMAT is not looks pretty good today. AMKR overextended, Amazon overextended. A lot of these guys are just kind of at points where, oh my gosh, I felt good taking profits when it hit my target, and then it just kept going. And that's the problem with this, right? Is you take profits, and then all of a sudden it's 1, 2, 3, 4 days more, and you're like, I can't just like jump in again. It's right at the end. Baba's pulling back, starting a little flag. This is what we're looking for. We're looking for things that are going to start these little retracements, get down to the next ability to set up our trades where we can have stops and targets and good favorable reward to risk ratios. Let's see here. I'm gonna pop. I'm gonna stick on SPY. I mean, it's the same basic chart. That's a 1 minute chart. Let me go to a 5 actually. Paper traded it at the end of day yesterday with good results. Okay. I mean, you can see right now it's like anything else. What's going on? You want to look at, and the buyers just pushed it up. They just pushed it. Past tense, pushed. 1, 2, 3, 4, pause one, and then it's just kind of sitting now. What's the thought? Well, the thought here is more likely, hey, this thing is now oriented to the buyers. They broke the opening range, pushed it up here. Whoops. Now what? Now I'm thinking I just need a trade setup. Right? That's it. Just like anything else. But it's likely to come in 15 minutes, 20 minutes, depending on right now. Now, if you were to drop down to a 3 minute chart, you might get a little different perspective, but it's going to be a much faster ride. So that's kind of the principles we talk about apply, whether you're looking at a day or a 2 hour, 15 minute, 5 minute. Um, Steven said it's hard to let things ride once you hit a target with only one contract and not be watching all day. Set the stop, be satisfied. Amen. Agreed. Yeah, yeah. You're getting no argument from me on that, Steven. Using the 1 minute chart. 1 minute chart. That's fast. You're not even day trading now. You know what they're gonna call you? They're gonna call you a scalper. You're a scalper. The fastest. Yeah, I actually like this. I 100% agree, Kyle. The SPY spreads are the best spreads, period. Nothing has spreads like SPY. Nothing in the world has options. It's so many contracts. It's just so many strikes. It's so many expirations and so many contracts. It's constant. So I think the SPY for me is. I know there's some tax advantages, but for me the liquid I make up for it on efficiency and other things. In my opinion, I guess I'd have to really like do some pretty deep research that I'm just unwilling to do. But I'm the same way. So it's a personal preference, I think. Yeah. Yeah, good questions today, everybody. All right, let's pop back over. Which time is it? Let's get through the watch list. Got a couple of candidates already. I mean, we've got an improved posture. We've got some things that are showing up. Where were we? We were around. Let's see, Baba. We were saying was kind of setting up. Bank of America, not yet. Actually, kind of. You could make a case. You could talk. You could make a case for that, for sure. Where you're saying this is where I'm trying to get in. There's my stop back down here. Can I ride this thing back up here to this 57 and a half, 58 level and get a 2-to-1 out of it? Or you say, I'm going to be patient and see if this, holds up. Here's City overextended. It's a no. Caterpillar, Sienna. A lot of these, where it's just like you thought you were going to get something and then it just did a few more days, but you're not going to like. I mean, look at this. That was the best it had done until this. It's a little better, and this thing just dwarfed them all. That doesn't mean I'm going to expect another one. Cisco, Cisco did its thing. Delta, Dow, boo. Did they report this morning? I think they did. GE 160, they got 186. That's a good beat, but you can see it gap down. Not good enough, apparently. Okay. General Motors overextended. Oh, let's see. Google's starting to maybe flag a little bit there. Goldman, Home Depot. We got earnings on IBM coming up. Intel. Someone traded Intel and popped a nice little gain out of it. And you can see this is one that was like way overextended and they caught the downside, took the profit pretty early. And it's like, yeah, now you can see why. Like you're thinking it could possibly, I mean, I thought, hey, it could, and it still could. But when you're trading puts, number one, you've got earnings to contend with, and already it's so prone to strength. Small caps keep pushing higher. Lumentum sideways. LRCX sideways. I think both of those are loading up. I think another trade could be coming in here. How do the options look on this guy? It's like there needs to be a consolidation. There's so many stocks that like at one point maybe they did well and then they started offering weeklies. And I think that it's starting to hurt the market. Like a stock like this would actually have decent liquidity if it would shut down the weekly options and concentrate trading in monthlies. It's actually better for us. That actually benefits the market makers. I don't love it. It's easier just to pop over and grab the next monthly and shut the other stuff down. Anyway, that's my little rant for the day. Mastercard setting up a little bit, but you've got earnings. Meta. Well, I like Meta. I think Meta's flagging. You've got time still. If it pops, I would trade it. I'll be watching that one for sure this week. Monster, no. Marvell. Woo. Still going. Morgan Stanley, Microsoft, Micron. Micron is key on my list right now. It's got this nice V style cup and handle. We're in the handle, and I'm looking for the handle to be a flag. So if it could pull back like this in turn, I'd accept that. It could pop out of the flag. I would accept that. Either one. Yeah. Yeah, you can actually see one kind of like back here where it had this move and then it really didn't do a whole lot, but you still got something and off it went. Um, yeah, Micron. Micron. I think we got a couple that are setting up today. Nvidia. No, not yet. Palantir. Palantir felt my challenge back here on this one. If it rolled, I was going to buy a put. Now that we're moving into this band of moving averages, I'm a little less, but I'm still thinking about it. It's still setting up. Q's way overextended. Rocket Lab overextended. Ross Stores is grinding. RTX is hit earnings today. Earnings were better than expected, and yet it's dropping. So something fell from guidance. Agreed. Yeah, Micron does look strong, doesn't it? I'm kind of chomping at the bit for that one. I like those other ones we looked at earlier, but that Micron has good options. There's a lot of qualities about that for sure. SanDisk, maybe. Let's go pop into this little SPY. Did we get? Now we're getting it. We said we're going to wait for the next consolidation. Here it comes. It's right at that level, but I give it a little bit of leeway. If it comes down in here and turns, that's the trade. And we're just gonna you would just look for a piece like this. 3.5 points. Boom. You get it, you're out, and then you see, can I catch something like that again? STX. Ooh, that's jiggling around a little bit. SYY. I think we have some stuff. Look, the market's continuing to look better. Our posture's improved. There's candidates, there's setups. Are there concerns about deadlines and talks? Yeah, but as of right now, the institutions do not seem overly concerned, and therefore, I also do not feel overly concerned. Our posture is improved. Don't go just yet. We're almost done. Tesla coming. Tesla's looking actually strong. I want to get to the VIX with you guys real quickly. I thought we'd have time to go look at the interest rates today. We'll do that tomorrow. TSM looks actually quite quite strong coming out of earnings. The earnings were good. The earnings were good. They have this same kind of a, like above the fold. I just need a little more, I think. If it was at the high for the day, I'd be like, yes, the stochastics. I actually like this one kind of a lot. We'll see. Taiwan Semiconductor volatility is not bad coming out of earnings. They have a good amount of options to trade. That's a strong candidate for today as well. So watching TSM, watching Micron. We had a couple of higher ones up that I forgot already, but we're watching those too. UPS, Vail, Vikings Cruises. Here's the VIX. Yes, this is what I was talking about, right? Like I have this whole, I would even go up to here. But right now I've got this zone where we don't get up in there and we roll over. That's very bullish. We love that. And you can see when you come out of a chunk, there's these tendencies to stay. That's good trading down there. So if we're coming out of this, there's possible good trading down here, hopefully for an extended period. I like what I see. VOD pulling back a little bit. That's all right. I'm going to give it its time. WDC a little overextended. Walmart, couple of good things. I like the tech stuff setting up. I'm hoping to see something out of Micron or TSM. All right. Well, look at that. We made it to the top of the hour. Well, the top of our hour. It's good to see everybody. Tonight, Glenn posted. He's got some plans for the session. Should be an excellent one. I'll be following up. So that's at 7:30 p.m. Eastern. I'll be on at 8:30 p.m. Eastern for some Q&A, some coaching time. Bring your trades, bring your questions. And then I'll be back tomorrow morning to open the market. Let's see if we get something today. We've got this better posture. Let's trade it. Thanks, Bit Boss. It's good to see you. It's good to see everybody. Peace be upon us for sure. Renee, that's a good sentiment to end with. Let's hope for the best. Have a great rest of your day, everyone. Happy trading.